Yo, what's going on, guys? It's Tyler from Division One Trading. Just wanted to go through some quick order block study with you guys. Those of you who might be struggling with order blocks, this will definitely be helpful. And I just want to talk about top-down analysis and kind of go through how I see them and how I interpret them. So I always like to start with a daily time frame, and generally I don't like to use candles that have wicks that are larger than the total mass of the body. So if I measure the top wick here, I'm going to keep that same width, right? Because that's the width of the top wick. And you can see if this is the volume of the wick is more than the body. Not that we can't use it, I just generally don't like to. So I would go down to the 4 hour. Right here, you can see we actually have a pretty nice body there. So I'm going to measure that out. Now, the 4 hour, but what we want to see on the lower time frames is say that, right, this is that order block. And this is in my free course as well. If you join the Telegram group, you can get that course for free. Just DM me. But we're talking about this order block here. And the way that we trigger it on the lower time frame is we have to trade through it. So once we trade through it, it's almost like a trigger or an activation. Then our eyes go back to this order block and the mean threshold for possible shorts. Now, the order block shouldn't give way to halfway. It should hold that. So best case scenario, we should see something like this, right? Now, when we go and look at it now, so we have it marked up on the 4 hour. And we drop down to the 30. You can see right here, it triggers it with that close. So this candle right here, once it closes, we've now triggered that 4 hour order block. So now let's measure it. So I'm going to measure this order block from body to body, and I'm going to put this line here at 50%. And I'm just going to make it a dotted line so it's a bit easier for us to see. So now when we go back down to that 30-minute chart, you can see we triggered the order block right there with the close. It trades down a little bit, and then you see how it pulls back up into the mean threshold of that order block? Now, our stop, say that we're entering at the mean threshold, our stop can be at the high of that order block. I generally look at the body. What I would recommend is watching this level here, the level that I'm highlighting in red. This is the top of that order block. Generally, that area can be really sensitive, but we don't want to see the mean threshold fail. So you can see it gets super close, gets right next to it, but doesn't quite break it. And then that responds, trades down, and gives a large trade. So say in this instance, say that we weren't around the chart around this time, say that we're only New York traders and we missed it. Well, I wanted to talk about this next order block that's in line, this large candle. So we're going to break it down the exact same way. If we're going to trade this order block, we have to see some kind of trigger. It has to go through it and then retest it. And then just to throw it up there, we're going to go ahead and add a 50% as well, just so everything is good. So now we drop it back down to our lower chart. And I want you to see same thing happens. They trigger it and then they come back into it. They don't make it all the way to the mean threshold this time, but we're in like a larger order block now and they started distributing. So this is essentially our market maker pattern. Right there you can see 50% of that wick. But this is essentially our market maker pattern. This is where we establish buys and then where we establish more buys. Now they broke down, retested it, and sold off. Same thing here. They broke down, retested it, and sold off. They don't always come to the mean threshold. But I want you to notice something too. They still traded around this mean threshold before the trigger. So that's kind of like a bonus tip is if you're anticipating lower prices, you can start to sell around the mean threshold. So regardless, say you went to sell here, your stop would be around here. Again, that's at the top of that order block. So now when you're looking at it from this perspective, say that you went short here at the mean threshold, your stop would be around here. So you'd be up about 3 to 1. Now, obviously, you can game that stop, enter here with your stop up there, and get almost 10 to 1. But a bunch of different ways to do it. Just wanted to show you guys these order blocks here. And then the same thing could really be said for this group of candles here. You can see they're all connected, all these bullish candles. Very similar price action, but this one just fell straight through right here. But you can still see what's going on. But that's how I use order blocks. That's how I use them with top-down analysis. And that's how I put some focus on the mean threshold. But if you guys have any questions about order blocks, feel free to let me know in the comments. Have a good one. Peace.